Ladies and gentlemen, welcome back to the channel. We do not have the camera in today's video because I'm a dummy and I forgot it. Now, not that you guys like to see my face or anything, we have a lot of important information to get into here in this video. So I don't want to waste too much time. We're going to get straight into it. The markets are down over 1% on the SPY, over 1.5% on the NASDAQ. Now the markets were down a little bit more. As you can see from the chart, you've kind of been going up and down. You got an explosive rally a couple hours into the trading day, and then you fell back down. Now you are trying to go on another explosive rally to the upside, and you're getting a couple candles as of right now. Now, in regards to AMC stock, AMC is down 1.69%. This is very good relative to the markets. During weeks and months past, if the markets were down 1% on the SPY, it would be no thing to see AMC down 5 to 7%. That is not what is happening here today. So you are showing some more relative strength, again, compared to the broad markets and relative to where we have been over the last couple of weeks and months. You're in a very strong position. Now, if we get into exactly what is causing this move down in the markets today, it is economic data. And you did get personal income month over month for January. You were expecting a 0.7% increase. It came in at 0.6%. Personal spending month over month was expected to come in at 1.1%. It did come in at 1.8%. Core PCE price index month over month was expected to come in at 0.3%. It came in at 0.6%. That is what is really driving the markets down here today. And then you got PCE price index month over month for January. Just the headline numbers, again, expecting 0.3%, came in at 0.6%. And the PCE year over year, you were expecting 4.8%, and it came in at 5.4%. So this is definitely showing inflation is ramping back up again, that maybe inflation is not going to go down in a straight line. And it's going to take more data points, obviously. But as of right now, fear is coming back about a Paul Volcker kind of situation with Fed Jerome Powell. Now, if you guys are unfamiliar, PCE, Personal Consumption Expenditures Index, this is what the Fed likes to pay attention to. Not as much headline CPI or core CPI, it is the PCE. Now, all of those things are important, but just the PCE tends to be more important to the Fed, and that coming in substantially higher than expectations is not a good thing. Now, a former Fed chair said the Fed can't tame inflation without significantly more rate hikes that will cause a recession. His paper says. He says, I should say it's the former Fed governor Frederick Mishkin is among the authors of the white paper that explains the history of central bank efforts to create disinflation. Mishkin goes on to say, while central bankers today sound enthusiastic and positive about getting inflation down without inducing mass unemployment and a recession, that has never happened in history where the Fed is the sole reason the economy is slowing down to the greater extent, and to actually get inflation down, to keep it down without causing a recession. They go on to say that has never happened before. So you get this paper and this kind of verbiage coming out on a day where inflation is coming out 100% higher than expectations. No surprise the NASDAQ is down 1.5 to 2% by the time you're watching this video, by the end of the day. Makes a lot of sense, right? Now, in those regards, AMC should be down a lot more. You are only down 2.38% at the time of recording this video, still holding above the major technical levels and still above the support level at $6 per share. So we'll circle back to the technicals here in just a second, now that you guys have the rundown on what is essentially happening here today in the markets. And if the markets weren't so overly pessimistic today, I do think AMC would have continued to go higher, yet again. Now, let's get into some of the things more specific around AMC. You can see this article says AMC wins big on Ant-Man release. This is the first quote-unquote blockbuster release of this year that brought in $104 million. People are saying this is a really bad movie, so even $104 million is good. And even compared to estimates, you were only expecting like $85 million for the first weekend at the box office. So a little bit better than expectations. Now, on top of that, Cinemark did report earnings. They were weak, but they express optimism for their post-COVID recovery. Cinemark stock is up 2% on the day. Essentially, they had weak numbers, but they gave you good guidance, and I think that's going to be the case for AMC, and I think AMC could rally huge in this next upcoming week upon their earnings, and we'll talk about that in the next video. Nonetheless, seems to be a positive thing. Cinemark is up 2% on the day. Now let's get into some of the numbers with AMC. AMC is on the threshold securities list, 23.39% short interest of free float, 120.5 million shares that are currently sold short, cost of our average of 346.75%, cost of our max 380%, and cost of our minimum of 7.6%. Seeing these cost of our numbers come down a little bit here today, you know, nothing that I would be concerned about. They go up, they go down. 348% cost bar rates from interactive brokers is very, very wildly high. It's literally out of this world. Who in their right mind would, you know, take out a position on AMC with over 300% cost bar rates? It's out of this world, so I wouldn't pay too much attention to that one. Like I said, AMC is still on the threshold securities list, and we'll look at the FTDs here in just a second. Now, you have 86 orders on the day, totaling $27.14 million, positive order value of 2%. Again, they're using the options to hide their short interest. That is my best running theory on why options have looked so bearish with AMC, why there's so many FTDs, and why there's so much put activity on that March 17th option expiration, guys. Now, let's take a look at the FTD numbers if you are unaware. As of today, let's go ahead and refresh this. You did see, in theory, about 1.4 million shares that needed to be bought back here today. Next week is where things get crazy, in between 2 and 3 million shares that will need to be bought back per the failure to delivers 35 days ago every single day in this next upcoming week. Monday is 2.1 million, Tuesday is 2 million, Tuesday is the day of earnings, and then Wednesday 3.2 million, Thursday 3 million, and on Friday about 2.9 million FTD. So I do think next week is going to be very explosive, and I cannot wait to get into that information in the next video. Now, as far as the Snonko tracker data, like I said, guys, you're seeing a lot of that option activity for March 17th. A lot of it is, you know, going to cover up short interest in AMC, at least in my personal opinion. That's the only thing that makes sense as of right now, especially if you've been following all of these videos, then it probably makes a lot of sense to you guys as well. Now, for this week, you are going to see about 30,000 calls expire in the money, 167,000 calls expire out of the money. Puts in the money, 35,000, puts out of the money 120,000. For that March 17th option expiration, the one that I am starting to watch a little bit more closely, 73,000 calls currently in the money, 588,000 calls out of the money. Puts in the money 275,000 and puts out of the money a 930,000. Just numbers that are out of this world. So there is that information. Now, as far as AMC on a technical basis, again, AMC is down 1.93% here today. You are still above your downtrending line of resistance. This has been the level in which rallies have really got rejected off of. And what I'm so excited about right now, we'll elaborate on this more in the next video, is that AMC is not currently, I would say, rallying above this line, whereas typically you would see the exhaustion phase come in around this line, whereas AMC is just looks to be slowly and steadily going up ever since the low that we just hit on February 14th after we again got rejected at this downtrending line. So long story short, let me put that into English. AMC stock is going up slowly and steadily it's not rallying above this line, and now you are holding this line very well. So I think from here, a rally is not going to be rejected as easily since you are above this long-term downtrend line. So hopefully that makes some sense to you guys. If you look at the RSI, it's at 57.62. Again, furthermore suggesting AMC could rally substantially from here and not be technically, overbought, right? There's a decent level that AMC could go to before it would be, getting shorted by algorithms, right? But before you would start to see some of those negative factors play a role on AMC. The MACD is now positive again after hitting negative on February 17th, guys. So things look to be trending in the right direction. That is pretty much going to be it for this video. What a beautiful day for AMC to be an investor in this company. That is it. You guys enjoy the rest of your days and your whole entire weekend. Hit the like button on your way out and subscribe to this channel if you have not already. But that is not as important as enjoying the rest of your day. So thank you for watching, and I will see you in the next one.